Oh, aloha everyone, Joshua Hayes at bigwavetrading.com. There's a lot to go over, so let's get into it. I want to remind everyone I keep it real. I do not edit these videos and prep them to make them as pretty as possible. What you're just getting is just a simple trader with his simple video. So with that being said, let's go ahead and start off with the overall market analysis. Right now, it's kind of a mixed bag. It's not bad. It's not good. I probably have a lot of chop going into the election. It's going to be very news headline driven. Expect a lot of gaps, and these gaps, just to let you know, wreak havoc on my personal bread and butter end of day methodology that I've built this website around. Gaps used to not be a problem. Elevated VIX used to not be a problem, but even though we didn't see the VIX explode higher on Friday, you can see this bottom line, and the VIX is below 20. This is when my signals, when they trigger, produce the best returns where we can get some very large gains, have more winners than losers, more gains than pain, and we can hold positions longer, get those big returns, and we have less volatility. When the VIX is above 20, it starts to get rocky, and when it's above 30, it's just a giant mess on my end. And we'll take a look at the time segment volume monthly indicator. But when you have the VIX above 20 and my TSV monthly are bearish, even if, first off, there's never been a time like that where then the market has actually trended higher. This is the first time ever with those two conditions. Ever. Do you understand this? Ever. That this has ever happened. And so despite this, if you're not long the leaders, like, here's one of the portfolios I have that I track, CMG, Lulu, Facebook, Regeneron, Genmark, Square, Fastly, Wayfair, NIO, Piton. And then this is the model portfolio, and you can see at least one stock here setting up. This has been added to the portfolio in August. It's dipped down since. You can see it's consolidating. It's here at the 100 SMA, and we're going into a medium squeeze. So this is a public, possible trade consideration to take and wing because it's part of my quarterly portfolio that we have for platinum members at Big Wave Trading. And that's something I want to mention really quick. We have two levels of membership at Big Wave Trading, gold and platinum. The gold gives you my end of day trades every single day with my exact good to cancel buy stop limit levels and my good to cancel sell stop levels. I tell you exactly what I'm going to do and set up the trades for you before I ever enter them on my end. You get a video lesson almost every session unless I am too busy due to this insane amount of number of stocks showing up in my scans. And you get commentary. You get that every single day, 5 days a week. It's only $300 a year, I think. It's some insanely low price. There's no excuse to not be a part of it if you want to be a part of Big Wave Trading. But then there's the higher level. There's the platinum level, and that's only $600 annually. It's extremely cheap. That's about what I pay for every other service like StockCharts.com Pro, FinViz Elite, MarketSmith costs me $1,000 a year. Then there's DAS Pro, which costs me almost $200 a month. I mean, Jesus Christ, it's really cheap. And when you do that, you get access to these portfolios of stocks, which are to be held 10 stocks, 10% of your account capital. You hold them for 90 days. It's rocking. I have a member tracking it with a $10,000 account, equal weighted positions. And according to his spreadsheet, it's up 7.5% this quarter, while the S&P 500 is down 1%. I have a user-defined index over at StockCharts.com that I track. And according to my tracking spreadsheet, which deals with the $100,000 account balance, while the S&P 500 is down negative 1% this quarter, the model portfolio is up almost 12% this quarter. Amazing returns, but that's available to platinum members. On top of that, we focus on day trades. And on Friday, I show up in the pre-market, can't be around all day. It's just the way things are right now. There were two stocks that I focused on. I normally focus on small cap stocks every day, but on Friday pre-market, I made mention that this looks like a big cap day. These are the two I was focused on, NNOX and TWLO. Gave that to everybody. Those were your two stocks. TWLO, not shown here, the options that expired on Friday, the 270 call options. If you bought this, what I consider a red to green move is whenever it goes Opening price, red, back above the opening price, this little blue line here. From this blue line to this high here, the TWLO call options ran over 230%, same day expirations. NNOX is a stock I would never trade options on, not liquid enough. The equity itself ran 20% plus. So those are your options as a platinum member to go along with the end of day trading, which used to be my bread and butter, but just right now isn't firing on all cylinders. That being said, want to go ahead and show everybody NFE. This has been one of the better signals from this entire market setup. And what's funny is that this isn't even what I consider a good signal. Look at this chart. Do you see all the red on this chart? I want to show you what I would consider not a great signal, but what a really, really, really good signal looks like. Look at what the volume does in the middle window pane. It truncates the rest of them. Look at all these pocket pivot point signals that led into it. Look at all this green bop in the chart, and look at this move right off a support level. And you can see WTRG, fantastic move higher from that level for a utility stock. Yes, it's only a 22% gain, but I'm going to show you another stock that set up like that earlier in the year and what it ended up doing. ARWR, in case you're not familiar with the video lessons. And unfortunately, I had 2 orders, no limit offset. I didn't get filled. But this is what usually happens. In 2019, I will remind you, was not completely lined up based on the full bigger picture because my monthly TSV wasn't lined up. And still there in 6 months, 232% gain. So that's what I'm used to. You can look at the past big winners and see what they used to do. The setups, the returns, the longevity without the volatility just isn't there anymore. But look at this one, NFE. 268% gain in about 3 3/4 months. Or excuse me, 3 months, 268% gain. Do I have a position in NFE anymore? No, I sure don't. I got a little too tight with my stops as I trailed it higher due to the volatility, and I let this little area right here shake me completely out. That being said, still took the meat of the move. I bring that up because kind of an unfortunate week last week. 3 pretty solid winners. I didn't get filled on any of them. NOVA was a new long signal on this day. Didn't fill. Good thing it didn't. Would have shaken me out with that little redip right there. But on this day, an even better add signal. 27 was my stop. Should have had a 27 limit offset. Had that been the case, would have been filled on NOVA. Instead, I didn't. 27 was my stop and limit. No fill, an immediate 13% gain. The very next day, LAD. This is my number 1 stock posted on the gold section for members. This is what it looked like to LAD. Not a great signal, not a bad signal, but it is a leader. Once again, 229.31 or 91, excuse me, was my stop, and it also happened to be my limit. No offset. Cost me again. Up 8% on Thursday, up 10% on Friday, 19% miss gain. And then on a speculative note, FPH. This was a speculative long trade idea. On Thursday evening, 437 was my stop. No limit offset, which would have been 440. Once again, you can see where it opened. It cost me because as it ran through, it triggered and did not fill on my end. That being said, other members or you could have done a market order. You're long these 3 stocks. So we still have some solid positions out there, but this market, due to the gaps, and we have another overnight gap I can see in the indices. In a bull market, what you normally see is the stock trends up or the market trends up, you have gap downs. Then they go red to green and close at the highs. That's a strong market. Markets don't normally trade like this. Where in uptrends, you get gap ups and then backfills. But, you know, that seems to be the case with this market. So with all that being said, as long as these gaps are in this market, as long as the volatility is high, as long as my monthly TSV is not lined up, the end of the day stuff is going to be trouble. My models is where it's at, or intraday is where it's at. TWLO, NNOX, and then of course we focus on stocks like WWR, which even though was not initially in play in the morning due to the gap down, did go red to green based on whichever metric you use, my blue line or the actual closing price. But by midday here, when that volume starts coming in, this is obviously the one to watch. Everybody knows about my VWAP, high of day breaks, or if it goes below the VWAP, reclaims the VWAP. Your new then break is with the good to cancel buy stop order above the highs. Had you even done that right here, you get a nice 40% move on WWR. So there are other ways to trade out there. I just can't day trade full time right now. We have a lot of great day traders in the chat room, and every pre-market, I tell you what you got to focus on, like TWLO and NNOX. But as long as the market's choppy, it's going to be a little rough for the end of day stuff. Now, that being said, how does the overall market look right now? Getting back to where we were, choppy. QQQ, to me, it's looking good. Long term, we're fine. There's nothing to worry about yet, but we got to clear this overhead resistance. On the QQQ, we're below the 5 EMA, and on the most shortest term of time frame, it can't be too bullish there. That being said, accumulation distribution is still strong. Chaikin is still around the zero line. Same with TSV PPO. Medium squeeze, and we are slingshotting back towards the zero line. So it's a mixed bag there short term. Same with the SPY. Overall, longer term looks fine to me, looks great. Shorter term, though, there's some areas of concern. We got to get above the most recent resistant levels. Excuse me. Excuse me again. That 340 area, and then we should be good. The best index on Friday, obviously, was the IWM. Delete. Fantastic session overall. It is above the 5 EMA. Same with the DIA. Pretty solid session intraday above the 5 EMA. What I like to look for in the short term, though, where are we at in conjunction with the 50 hourly simple moving average? The DIA went back above it here, tested it here, and bounced off of it. Excellent. Great first step. IWM broke back above the 50 simple moving average. It's starting to trend higher. Has not retested it yet, but at least it's above an uptrending hourly 50 SMA. That's another thumbs up right now short term for the overall market. SPY broke above the 50 hourly SMA, retested here, trending higher. So far, so good. The QQQ, this is the one that's a little bit rocky right now because at the close, hourly, it closed below it. But here's its test. Until it closes below this hammer low here, this little wick low, everything is still fine with the QQQ. The other thing I like to do with knowing how strong we are, we look at the anchored VWAP from the highs, and you can see QQQ, just like the 50 SMA, it was finding support there. Now it's back below it, so this is the next line in the sand. QQQ has to hold that, or else, you got to expect some more chop moving forward. Where are we at with the SPY from the highs? We're still below it, so we're not in the clear yet. And same with the 200 hourly SMA. We're not in the clear yet. IWM's a little bit more weird because its highs was placed a while ago. We'll just use this level here right before it closed. Below it right here with that little sell-off, and you can see the IWM is above it. So the IWM right now is looking like the leader. But the last time the IWM looked like the leader, you can see what happened. So this is a headline-driven market, and until that changes, we got to expect some more chop probably before any solid, trustworthy trend ends up showing up out there overall. So model portfolio is rocking. Day trade alerts are rocking. End of day is still a gigantic mess. So either you have a long-term view in these leading stocks. I'll show everybody this portfolio. Don't want to tell everybody the name of it, but this is I look for basically it's a strong accumulation distribution line, and it still has to be a leader in its industry group, and it has to be beating on the top and bottom line. Let's see if it shows up in GNMK. That one's in both. CNMG, it's not in there. REGN, it's in there. So you'll see this earnings beat thing change whenever I go through most of these, but I have to actually type them in, and I don't want to do that. But obviously, all these names, all these names, so it shouldn't be a surprise to anyone there. So now, before we wrap up this video, let's see what the longer-term models look like with the overall market. So this is my monthly time frame on trading view, and this is the background colors that I always, when this is lined up and the VIX is below 20, amazing things happen. The SPY will show it to you the best. I want to remind everybody, green with the moving average uptrending, amazing things happen, right? In this section right here, 2003, 2004, 2006 and 2007, 2009 to 2011, 2013 into 2014, 15 really, and then 2017 to the 2018. But this is the only time that you'll see, and if you look at all these other times that we were red, where long period of red, but somehow the market rallied higher, but then all of a sudden in March, no surprise there. So on a monthly time frame, the QQQ still remains the only bullish index. Now, TradingView, even though October only has a couple of days, it still calculates the monthly time frame, which it really shouldn't be doing because it's treating it like a completed month. So as we move forward, you got to use what we're seeing here is a little bit of grain of salt because it's not quite like that. But if we can close the month similar to how we are now, the QQQ is in great shape on a monthly. On a weekly, it's fantastic. But the daily, it's been bad since we started to sell off. When you have all three of these time frames lined up, which you see how it was green here on the daily, and on a weekly, we were starting to get green here, and on a monthly turned higher right around here. If you notice, great things happened with the NASDAQ right there. Look at that, because things were lined up. However, they're not lined up on any other index, and that's the problem. So you got to focus on the NASDAQ name still right now because things just aren't lined up everywhere. Those periods where my best end of day swing trade, trend following returns happen, everything's lined up. We still don't have that. So now looking at the other indexes, here's the DIA on a daily basis. You can see here, even on a daily time frame, when it's green, good things happen. Red, bad things happen. But when you're red on a daily and you're red on a weekly, expect some chop. And then on a monthly, like I said, you got to take this with a grain of salt because this is actually not how it looks. This is what it looked like at the end of last month. You can see that moving average is still trending lower with the signal line below the moving average line. But if we can maintain how we are now, you can see by the end of the month, this is what we might look like. Unfortunately, the moving average is still declining. The best setups happen after we cross, and then when that moving average starts to trend higher, good things happen. Last time that happened was in 2017. So I just want to show you guys. IWM, same situation. You got to take this with a grain of salt. But if we end up like we are right now, we're finally getting the green for the first time since June of 2018. That would be awesome to see. That being said, actually, wow. So hopefully if we stick like this, the moving average will actually be turning higher. If you look over here, you will see we go from 1-2 to 1-3 in the first two digits, that large number. Million? Wow. What is it calculating? Okay, so anyway, it'll be turning higher, and that'll be a good sign, but that'll be the first time the monthly goes green in over 2 years. Quite impressive. And then, of course, the weekly, looking good. Looking good. I like that. Looks good. So the monthly could confirm it. And the daily, we're starting. We've got the daily, weekly, and at the end of the month, we could finally have this green. And then I have no problem if I get a signal that looks like WTRG that I showed you, or ARWR, start pushing 5, 10, 20% of my account capital in each position. I happen to have a lot of long signals sometimes, but remember, and I normally, like, basically 20% of all the stocks I own will make up like 80% of the portfolio, and the other, like so if I have 100 positions, which is insane, 20 of them will represent 80% of the portfolio, 80 will represent 20. Now, the ideal portfolio, obviously, like my model portfolios, is 10 stocks, 10% each. You could be very aggressive, 5 stocks, 20% each. I would never recommend anything lower than that, personally. That's just, how I feel. Now, on the SPY, the last one we'll look at the daily. Ugly since those highs. The weekly, though, still strong, indicating chop. monthly, just like the IWM. This is what it really looks like. And I know we got some green there, but if you look once again over here, you'll see that moving average is still declining and getting lower and lower. Will it finally turn higher in the next month? Yeah. So the moving average will finally start to curl higher with that signal line above the moving average line if we can maintain this level throughout the month of October. But it's still early. It's only the 4th of October, so who the hell knows what's going to happen. Now, to wrap up this video lesson, I do actually want to give everybody a trade idea. It's actually my best one heading into Monday. It's CROX, and as you can see here, it's in my strong earnings chart list. To be in there, you have to beat on both the top and bottom line on earnings. So actually, that's all you got to do. You got to be beating on the most recent earnings. You have to beat on the top and bottom line of the estimates. Raise guidance is even better. CROX did not raise guidance, so just keep it at that. It beat on the top and bottom line of the most recent earnings report. You can see the 5, 8, 21, 34 are stacked on top of the 50, 100, 200. It's not a medium squeeze, but we are in a loose squeeze after being in a medium squeeze. TSV, PPO is above the 0 line. Chaikin is at the 0 line, but it has not fallen below it, and the accumulation distribution looks good. So it's in my strong earnings chart list. Everything is kind of lined up, because not in a medium squeeze anymore, loose squeeze. And we have actually, I forgot to mention the volatility stop below price. So everything looks good. It's also in my favorite scan, Perfect Speculator Scan. That scan looks for stocks up at least 100% from its 52-week low to its current 52-week high in the past 52 weeks, obviously, and is within 20% of those highs. And as you can see, CROX is there. So my game plan with CROX is a good to cancel by stop order at 46.25. If it gaps up, my limit will be 46.25. If it does not open down there, you can add a 1% limit offset, which is basically adding 46 cents to the 25. If I do crude math, I believe that's 91 cents. So 46.91 will be my limit. And then you've got to give it all the way down here for a stop, 40.11. So you can have this stop here as your stop. You could use this level here, or this level here, this level here, this level here, but you have to expect the stock to pull all the way back here. So how I account for that is I take the 46.25, I subtract it from my final stop level 40.11, I get that number, I then divide that number into the dollar amount I'm willing to risk on the trade idea, and that's the amount of shares I buy. And then what I will do, if it fills, if it flushes immediately on day one, hey, it's my stop. No big deal. Only lose so much. But if it starts working out, I'll then put a stop here. I'll put a stop here, 2, 3, probably 4, and 5. And yes, I'll have 5 stops. It costs me $1 probably each at Interactive Brokers, $5, plus the $1 or $2, however much it's going to cost to get in. Very low commission. But if you have E-Trade, Charles Schwab, TD Ameritrade, Tastyworks, $0 commissions. It shouldn't matter. And also, you could initially do what I told you to do with the math, or if you only want to use this level, you take the 42.65 number, or the 46.25 number, excuse me. You subtract it from 42.87, get that total divided into the dollar amount that you're willing to risk there, and that will give you the total amount of shares. So a little bit longer of a video lesson. Hopefully you learned something more about what we do at bigwavetrading.com. If you enjoyed the video lesson, give me a thumbs up. If you didn't, thumbs down. Hit the subscribe button if you want to be alerted for the next video. Comments, suggestions, questions, curmudgeons, leave them below. I'll make sure to get back to you as soon as possible. Have a wonderful rest of your Sunday or Monday morning, and great luck in your upcoming trading week. Happy trading. Aloha.